She's a day trader with one simple goal. Her goal is to teach others how to apply technical and fundamental analysis to the natural market movements in order to make high probability trades that pave the way to profitability. Through her education company, Day Trade for a Living LLC, she's transferred 12 plus years of data analytic and research experience into learning and documenting one trading strategy that she can now teach to others through simple lessons and mentorship. And today she's here to provide an overview of how to apply price action breakout trading. And I'm sure she's going to give us a lot more than that, but I really want you to welcome her.
My little Hi, Sherry. Thank you. I'm here.
My little niece always says, "Hun," and I'm like, "Girl, you better stop it."
Thank you for that introduction, Sherry.
You're very welcome. Thank you so much for joining us. I'm super excited because are you just getting started with your teaching and mentorships, or have you been doing this for a while?
Yes, I am. So the teaching and the mentorship is new. Can you see my screen?
Yes. Now, you know what? Count to about 5. I'm going to turn you into an organizer so you can see the questions and answers box.
Okay.
And let's see. It's going to knock your microphone out for about 3 seconds. And now you're back. So now you should be able to, are you familiar with GoToWebinar and all the little menu on the right-hand side?
I'll figure it out.
Okay, well, there's a section. Okay, so it's not intuitive. Chat doesn't allow people to talk to you. Chat lets you talk to people. Questions is where you're going to see when people have questions for you. So, and then on the right-hand side next to the little X, there's a little thing where you can pop it out of the control panel so you can see everything. And then I always go to the received column and I click it so that the arrow is pointing up. So I get the most recent entry at the very top.
Okay, great.
That's my little tutorial for the day. And I'll be quiet now and let you take it away.
Oh, thank you so much, Sherry. I really appreciate it. And hello, everyone. Thank you for joining. So as Sherry said, my name is DeChandra Hendry. I am the owner and operator of Day Trade for a Living. I work for myself as a funded trader, where I specialize in using the price action breakout strategy to generate trading profits through short-term price movements. And through Day Trade for a Living, I teach others how to become traders by providing educational mentorship, where I teach the price action breakout strategy and I introduce you to tools and resources needed for trading. And I use a structure that I like to call the 1-1-2 rule. As you grow in trading, that rule can expand, but 1-1-2 is the foundation. And so as an independent trader, we may not have the experience of having worked on a trading floor or necessarily, for a financial company. But using this structure, you can absolutely become a trader and begin making additional income for yourself. Trading is inherently risky. And while I can never guarantee profits, I would never request, profit shares, anything like that. The only thing that I can guarantee is that I can teach you the strategy and give you the tools and resources that you need to become a trader if that's something that you're interested in. And so just a disclaimer, as I said, all trading activities carry a high level of risk. No information or opinion presented should be taken as solicitation. Past performance is not an indication or guarantee of future performance, and trading on leverage can work against you as well as for you. So before deciding to trade anything, you should really consider your objectives and your level of experience and your risk appetite. And so I want to break down my opening statement. I want to break down my opening statement so that you know exactly what it is that I do and how I do it. So just like companies can be funded to begin and or continue, expand their operations, people can also be funded as well. And so in terms of trading, as a funded trader, I've been given access to trading accounts that are funded by other companies, which in turn gives me access to higher account sizes than I would have had on my own. Um, and the great thing about it is that it limits my financial risk and allows me to grow my own capital faster through very favorable profit splits. And, in this way, I work as a contractor where I can use my own analysis and thought processes to make decisions. I don't receive signals or company led directives. I do not base my trading decisions on indicators. I'm really operating as an entrepreneur where I can set my own schedule and work from any location. As a trader, right, I am performing the actions of buying and selling financial instruments that have monetary value and, that can actually be traded. So collectively, right, these different types of instruments are called securities. And so part of the Day Trade for a Living mentorship is that while we do review technical analysis and work through that process on many different instruments, the goal through that is for you to pick one so that you can become an expert in that one instrument. And that's going to give you your foundation. You don't have to stay always trading that one, but that's going to give you your foundation. And so when you hear, and I'll reframe this and I'll kind of speak from my own perspective, right? When I first heard about day trading and I heard these terms, buying and selling, my first thought went to I think, something very typical of, oh, I'm buying something from somewhere and I'm selling it to someone else, right? That was my first thought, but that's not what we're doing here. As a trader, I'm placing an order to buy a security. And when I buy that security, I want to, when I buy that security, I want to buy it at a low price, right? That's when I want to enter my trade. I want to buy it here and I want to exit here. If I'm selling, I want to enter here and I want to exit here. This is a quick example of of the Tesla chart, actually from today. So yeah, so this is a quick example of the Tesla chart, but I wanted to give this to you, just as a visual so that you understand that when I'm talking about buying and selling, it's not something physical. I'm not trying to sell it, something to someone else. I'm not trying to, I'm not trying to have someone buy something from me, right? I am placing orders to buy, to do a buy and sell. And if I were to do a buy, for example, I would want to buy at a low price and exit my trade at a high price. And the price that I buy, or should I say the difference between the price that I buy and the price that I exit, that in between is where my profit lies. Same thing for a sell. If I identify a selling opportunity at a high price, I want the price to go down and then I want to exit. And that difference between where I entered for the sell and where I exited, that same sale, that same order, that is where your profit lies. It's right there in the middle. And so I really enjoy trading because it's self-directed. And my profit does not depend on anyone else. I'm not going out and, pitching a product, I'm not making a product. This is, the market is here. The market has been here for, a very long time. And so that's something that I really enjoy about trading, because I am able to use my own analysis and make decisions, whether it's to buy or to sell. And so when for example, if I wanted to enter a trade for a buy, that means that I think the price is going to go higher. If I enter a trade for a sell, that means I think the price is going to go lower. Now, when I talk about think, right, this is not me guessing. This is not, trying to predict what's going to happen. This is through detailed analysis, and that detailed analysis is the price action breakout strategy. Through this strategy, so I'll break it down. So price action, right? Price action is the analysis of basic price movements. And a breakout is any price movement outside of a defined area. And so this is like a quick visual to kind of show you what a breakout would look like. And we will also get into a live chart as well. But this is a quick example of what a breakout would look like. And it's not always, this pretty, right? I think anyone who's a trader knows that. Not always this pretty, but for anyone who's new to trading, if this line right here, this blue line, represents our defined area, this candle right here represents our breakout. And we have all these wicks over here that I would say start letting us know where price wants to go, right? And I think the great thing about the price action breakout strategy is that, and I would say the way that I employ it, is that I don't try to predict what the market is going to do. Instead, I let the market tell me what it's going to do. And when there is a breakout, that is essentially the market telling you what it's going to do. And so there are five basic steps to this. And please understand, this is an extremely basic and pared down, outline, if you will, of the breakout strategy or how to apply it. Extremely basic, right? We want to identify our breakout points. We identify our breakout points through technical analysis. And that part is actually done ahead of time. And the reason it's done ahead of time is because the people make up the market. And because the market is made up of people, the market shows memory. There is memory in the market. You can see it. And so when there are clear breakouts or areas where price was previously tested, when you see those areas, when you're looking at a chart, it is likely that because of that previous memory, that the market is going to respond to that price, meaning the people are going to respond to that price, right? Of course, there's no way to guarantee that, because the market can move or price can move in any direction at almost, any time. But using the breakout strategy and identifying those breakout points ahead of time allow us to preempt the market, if you will, so that when those breaks happen, you're able to identify them. And the breakout points, they are historical places within the chart as well. So I'm not just looking at the chart for today. I might be looking at a chart for an entire, 2 years, 2 weeks, 2 months, whatever it is, to identify those breaking points because they are there, right? And so we document that ahead of time. And so when we go into our charts every day, or however often you trade, you wait for price to make that breakout. If there is no breakout, if the market does not tell you what it's going to do, as like an independent retail trader, I don't make a move. I wait for that to happen, right? And then all breakouts have very clear rules that they follow. And one of them is a retest, meaning after the break, price will come back down either to or near where that break occurred, right? And so by having our breakout points, by having our breakout points already identified on the chart, we are also able to identify areas of retest. And from there, we can enter the trade. Now, after you enter the trade, your trading style will dictate how long you stay in that trade. I know for me personally, I am more of a intraday trader or a scalper. And so for me, especially being like a funded trader and having been funded for a while now, I enjoy getting into a trade, maybe staying in for an hour, maybe staying in for a day, or maybe even staying in a trade for 15 minutes. I enjoy that. And then I enjoy closing that trade in profit, right? And so by using the price action breakout strategy, you can identify historical turning points or historical areas of price where the market is likely, or where there's a high probability that the market is going to react. And you can let the market tell you what it's going to do. And with that trade, you always want to practice risk management. No matter how large or small your account is, you have to practice risk management. Because if you don't, that is how you lose your money. And there is no guarantee, of profits when it comes to trading. All you can do is apply your best analysis and really that's it. You can apply your best analysis and, make a decision. You're either going to buy, sell, or you're not going to trade. And knowing which one of those 3 options to take is the key to profitability, and probably something that's not often talked about is the fact that not trading, or choosing not to trade in that moment is an option, and it can help protect profits that you've already made. It can help protect your account, especially if you are a funded trader. It's not trading, especially after you've when you're analyzing the market and you just see this is just very noisy, there's no clear move that's happening, just wait it out. Walk away do something else, set an alert, and come back when the market is ready to tell you what it wants to do. And so when you are entering your trades, or actually when you're in your trade, you really want to be able to identify when you're going to exit, right? Because you do not want to risk too much of your account balance. And so for me, I follow a rule of 2%. I do not risk more than 2% of my account starting balance. And what that tells me is either if my account starts to, or that particular trade, if it starts to approach, or if it reaches that 10%, two things have happened or could have happened. One, either I made the wrong trading decision, meaning my analysis was off. Maybe there was an issue with my breakout area, whatever it is. I made the wrong decision. Or two, I entered at the wrong time. So my analysis could have been correct. The trade overall could have went in my direction, but I entered at the wrong time. And so for that reason, I had to get out of that trade. Now, a lot of times, or I will say most times, I will actually set a stop loss so that, it really prevents me from violating that rule, because as traders, you have to, it's not just important to understand when to get into a trade, but it's really important to understand when to get out. You got to know when to get out. You got to know if your trade is a loser, or, if your trade is a winner. You also have to know how to capture your profit. And so your trading style will determine how long you actually keep that trade open. Like I said, for me, sometimes I keep trades open anywhere from 15 minutes to a couple of hours. It truly just depends on how the market is reacting and where my comfort level is in terms of staying in that trade for a longer period of time. There are traders who stay in trades for much longer periods of time, anywhere from days to weeks to months. That's the beauty in trading. You can choose your own style. And, there's different styles that you can use. And the price action breakout strategy is suitable for all of those styles, to be honest. And so these are, like I said, the 5, I would say, extremely pared down steps to actually trading the price action breakout strategy, right? And so a part of that strategy is the technical analysis. That's the piece that we do up front, so that when the market is moving and when it's reacting, we can see it and we're able to use that information, to our advantage. And so I do want to actually hop into a live chart and just walk through, again, very basic, but a way that I use technical analysis, or how I deploy technical analysis, right? So let's see, here we are. Can you see a chart on my screen? Well, if you can't, let me know, right? So right now I'm looking at the S&P 500 index, right? Some of these lines up here are actually, they were actually charted, wow, maybe a year ago. Yeah, I think it was about a year ago that these were actually charted up here, right? And so right now I am on a daily time frame. meaning each one of these candlesticks represents 1 day's worth of price movement. And so we have our prices listed over here to the side, and I'm gonna shift to a weekly view, and I'm gonna, scrunch this down a bit. And you can actually see that, again, these these levels have been here for at least a year, and the market overall has respected it, right? And so because we're in 2023, so yeah, it's actually pretty good. So anyway, yes, so these are where the levels are. So I'm actually going to go to a 4-hour because I think this will be like the best representation of how you can identify like a breakout area. And so if I was on the 4-hour time frame, meaning each one of these candles represents 4 hours worth of time, right? And through the mentorship, we really dig into the anatomy of a candlestick and really everything you need to know about these candles and the different patterns and things. We'll go back to March, right? Which is actually a pretty good time. When you are trying to identify a breakout on the 4-hour, anywhere from, the most recent time to maybe back to about 3 months is it actually gives you a pretty good perspective of the 4-hour price areas that you need to be aware of, right? And so if I were to identify like my 4-hour zone, as I would say, right? I'm going to look for a place where the market clearly broke through an area, and after it broke through, there was continuation of that trading direction, right? And so I have a lot of templates in here, but this would be a good 4-hour for me, because I would say like, okay, going back to March, for example, March, we had a break. There was continuation, the candle after it. We had a very good retest because it came right back down to that line. And since that point, price has never fallen below, right? And you can see where price is all the way up here. So depending on the type of trader or your trading style, if the goal would be to enter for a buy down here, right? Right along where this retest area is. This is 4 hours. Like I said, each candle is 4 hours. Maybe you stay in it for 4 hours. That's money for you. The difference between 4033 and 4057. You've been able to make a profit. Now, this happened in March. Just say you are more of a swing and position trader. From March to now, really, we were at, 4033, and now the price is up here. Well, the price is actually right here at 4286. That profit lies in between of the in the difference, or should I say between the difference of where you've entered and where you've exited. This is one way, or this is a way that I employ the price action breakout strategy. I look for a breakout or an area of a breakout, and I document it. And I wait for price to have a reaction. And you can see here, even going back a little bit earlier in March, price kind of told us what it wanted to do with this wick. Here, this is more of a fake out, right? So I could even move this up a bit if I, maybe even to around here. I could do that. But I can see here, this is more of a fake out, because when we have these breaks, price typically will continue, right? It's going to go from one price area to the next. And I really like this shape of, like this V, because it will show you a clear breakout. Now, and I don't really, yeah, I'm gonna keep it down here, because I think it's really important to see that there is a such thing as a fake out. This is it right here. You got a break, but the candle after it, technically, even though it closed above this line, this was in the wrong direction, right? And so that's where we have this fake out occurring. Now, if you are, more of a scalper, you're more, because this happened over even the course of a couple of days. If you are a day trader, you may have been able to take advantage of this price movement. But where this wick came up and then price kind of came back down, this is also where traders lose money, because they don't always know how to take their profit. And the great thing about this price line is that, I can, in order to confirm that this is the spot that I want to place this 4 hour, I can continue to move. I can continue to go back and, look for other areas of a break and make sure that this area is valid, right? Because again, the market is going to do whatever it wants to do, meaning price, right? Because there's so many people that are actually trading. It's gonna, the market's gonna do what it wants to do. But as a trader, it's our responsibility, especially when you are like more of an independent or retail trader, you have to understand when to get out of your trade if it's not going in your direction. And when you are trading the price action breakout, it's really, really important to understand what a fake out looks like, right? And so these are the things that we talk about in the mentorship, and we, review in terms of, okay, where do we put our where do we actually put our breakout points? How do we identify breakout points? All of those different aspects of actually applying the strategy. I'm gonna hop back in. So that was a little bit of the technical analysis, right? Because it's all about the numbers. It's all about looking at, the price and looking for that break. I didn't have to add any indicators. Volume, I do use volume as confirmation, but not as my, I would say like as my signal to say, okay, yes, this is a good trade. I use volume as confirmation. We talk more about that in the mentorship, but the great thing about volume is that the more volume, or should I say the higher the volume, when you get that break, the more likely it's going to be a, like an actual real break and not a fake out. And so volume is often I would say, an under discussed aspect of trading, but volume is, actually very important. On top of the technical side, right? Because I can't just look at the numbers and say, okay, this is it. Because I know that the market, we the people make up the market, which means the market does have like a little bit of emotion to it, right? And why is that? Because of news. there's different information that comes out that can influence the way your chosen instruments or instrument, the way that the price is actually moving. And so as a balanced trader, I would say, I also pay attention to fundamental analysis. So I look at the news reports. I'm not sitting, and just reading the news all day long, but every day there are different reports that have to do with finances for many different countries all over, all over the world. And I look at those. Any type of big news releases, especially, right now, the big thing that, we're waiting on is the Fed's decision about interest rates. And so any type of like central bank decisions or meetings, those are really important, the consumer price index. And so you may not always know exactly how that news will impact what you're trading, but that's why using the 1-1-2 rule, even though we practice our fundamental analysis on multiple instruments, when we are actually choosing what's going to be, like the instrument that we used, to become an expert in, you have to know which news, or should I say how the news is going to impact that instrument. And so trying to monitor that, over tons and tons of, different instruments, that's harder to do, right? Especially when, again, you are an independent trader, that's harder to do. So by focusing on one instrument, you're able to really hone in on what's happened in the news and identify why did we get a price spike at, let's say, 10 o'clock? Oh, I know why. I went to the news, and there was a report there. The consumer price index wasn't what the Fed thought it was going to be. And you're able to start understanding why your instrument is moving the way that it's moving. And so there's tons of, different news reports. Many of them come out at the same time, every week, every month, every quarter, things along those lines. But as part of the mentorship, we review that. We look to see, like, hey, not only are we trying to look at our chart, for the technical piece, but we want to look at, the news for that fundamental piece, because that's where a lot of times you will see, depending on what you're trading, and the time, you'll see different spikes up and down for price. And then how do we actually, do this? So the 1-1-2 rule is this. You learn one strategy, right? There are many different trading strategies, many different. Learn one, pick one, try to master that. Choose one instrument. You can practice your technical analysis on as many instruments as you want, but pick one instrument to really apply that strategy to. There's so much information out there online about the breakout strategy, about price action. There's so much information out there, right? That sometimes you can kind of overload yourself, and you're like, oh, okay, this strategy didn't seem like it worked today, so let me try to add this in. Or, I don't want to trade this today. Let me try to go do something else. And you risk your profits. Your profits go down because you have to keep it simple. One strategy, one instrument, and that's starting out. And then for consistency, you want to trade or at least review your trading charts twice a day. You may not actually see the opportunity to trade because, again, as traders, we have three options. We can buy, we can sell, or we don't have to trade at all. Not trading at all, when you do not have clear direction from the market, it's okay. That's fine. Allow the market to tell you what it's going to do. And the way that we follow this rule, especially being an independent trader, is I follow the whales. There are specific times of the day where certain instruments will have a lot of volume, because that's when the big guys are in there. The banks, the hedge funds, that's when they're in there. They might be adding to their position or taking away from some of their position, but that's when they're in there. And so when we are trading together, there are going to be certain times that's better to trade than others, especially with the price action breakout strategy, because volume is an important factor. And I'm not trying to influence the market. I'm not trying to, make a new move or a new pattern. I'm not trying to do any of that. As an independent trader, I want my profit. And so, it's kind of like, little fish meet big fish. I'm going to ride on the back of the big fish until I'm ready to let go. And a lot of times, like I said, for me personally, 15 minutes to an hour, if that. There have been many times when price has moved so significantly in even 5 minutes, even 2 minutes, that if I'm up in profit, a few $1,000s, I'm getting out, because that's responsible. I don't have to stay in. I'm going to get out. I'm going to take my profit. And so that's why I like the price action breakout strategy, because there are clear rules to price action and there are clear rules to a real breakout. And, like I said, there's tons of resources and information out there about the breakout strategy and about price action. But a part of the mentorship is actually bridging the gap, is bringing all of that information together, bringing it all together into one cohesive trading plan. And so for the mentorship overview, this is everything that you get right now. Like I said, I am the owner and the operator of Day Trade for a Living. So right now, this is what you get from the mentorship. And the new round of mentorship will be starting in July. Actually, the second week of July. We'll be starting in the second week of July. So from now until the end of this month, the mentorship is open. And so through that, you will get a detailed explanation of the price action strategy and how to apply it. Through the mentorship, you will get a really good education about the economics of money. That's like how does money actually work? We have weekly live sessions, and they are recorded for these lessons, so that if you're not able to make it, or perhaps there's something else that popped up, you can go back and you can listen to it. We have live trading sessions, and by sharing your trading results, because again, I don't enter trades for people. I'm not telling them exactly, hey, enter now, go here, go there. It's a conversation, and I identify and help them identify, hey, this would be a good area to enter a trade, and here's why. Ultimately, it's up on the person, it's up to the person who's interested in trading to actually take the step from technical analysis and so much charting to actually taking that step and trading. I get you set up in a demo environment. And the great thing that I like about that is it allows you room to learn. You're not starting with your own money. You are in a demo environment and you're learning. The goal is to treat that demo environment account as your own, but you have to learn. And so trading in a demo environment can be very helpful. We have trading psychology and trading discipline discussions. We talk about risk management strategies, and I give you my trading plan, like exactly how I trade, what I look for, what I do. I give it to you. And so if you go to my website, daytradeforaliving.com, you will be able to schedule a meeting. The cost of the mentorship is $6.99. This will cover your entire first year. Typically, I think typically mentorship takes about 12 weeks. I would say 12 to 16 weeks, right? But we can't really, put a time frame on it because everyone is going to learn differently. But when you join the mentorship, you have access to me, the information, the sessions. You have access. This is the access that you get. And when you are ready to, step out and trade in a live environment, you can still be in the mentorship. And the great thing is, when I do your one-on-one trading profile and result analysis, we're able to pick up on, I would say, different patterns and trends with your own trading as well. I've been in data analysis for, maybe, I think I'm coming up on 15 years, 14 years, something like that. And so being able to export information and, break it down to understand what's happening and why, that's my expertise. And so that trading profile and result analysis is really going to come in handy. And through the mentorship, you will actually start to develop or identify your own trading style, right? Because that's going to be really important. Because if I am more of let's say I'm more of a scalper, I want to be in and out. If I'm more of a scalper, and you try to mimic exactly what I'm doing, how I'm doing it, you may end up actually, I would say, risking your profit, because maybe you are more of a day trader. Maybe you are, or intraday trader, I should say. Maybe you're more of a swing trader. So what happens is that if you're more of an intraday or swing trader, and I'm more of a scalper, when I'm in and out, let's say that's my morning move, right? Because unlike typical scalpers, I try not to go into the, make multiple trades over and over and over within that period of time. I use, or I employ the strategies that an intraday trader or even a swing trader would use to identify good areas of entry. And then from there, depending on the way price is moving, I can decide if I want to scalp, if I want to swing, or do I want to more so in intraday trade. But that's also the power in the breakout strategy and learning how to do how to trade using the breakout strategy. And so it's trading is about consistency. You have to be consistent. You have to really want it. You can chart and run technical analysis all day long. At some point, you have to take the leap and actually begin to trade. And when you are trading, you have to know why your trades are winning and why they're losing. Those two things are very important. And so mentorship overall can can cut down some of that learning, but like I said, bridging the gap, bringing information together. But overall, you have to trade. The more you trade, the more you're going to see your own tendencies as well. And through the mentorship, I can help you with that. And so if you are on the fence about learning to trade, whether it's the cost of mentorship, the potential time commitment, because I will say that, I think to be profitable, at least give yourself 12 weeks of really learning and practicing, right? So the cost of mentorship, could be a barrier. The potential time commitment could be a barrier. And just because trading is risky overall, that could be a barrier to you as well. But I want to give you a personal story of mine. And hopefully this will help change your perspective on those barriers. And whether or not you decide to reach out to me and for the Day Trade for a Living mentorship, or you decide to, go to another organization or learn on your own. I think the goal of this story, and it is real. This is my personal story. The goal of this really is to make sure that there are ways to make money that don't require you to sell products, make cold calls, or any of that. It may take some time to learn, but once you learn it, you'll be profitable, right? And so in 2012, I was introduced to a new concept of money. Not once, but actually twice. The introduction was not through any type of seminar or educational platform like we've joined here today. The first introduction was actually provided during a 1-hour episode of a TV show, right? The TV show was super entertaining, and my husband and I tuned in every week, right? We loved it. And after we watched that particular episode where they were talking about that new form of money, and I'm putting up air quotes, he and I talked about how intriguing it was, and how cool it would be to have your own money. Like, wow, what a different concept. After that conversation, I never gave it another thought, right? A few weeks later, I received a phone call asking if I heard about this new form of money, and that a friend of a friend was going to buy it, and the person who called me heard about it, and they wanted to know if I heard about it. The name that they gave me was different than the name that was on the TV show, but from what I recalled from the show, it was very it sounded very similar in the way that it's used and all that kind of stuff. So I was like, it kind of intrigued me a bit. And so because it sounded so similar, I decided to do some research. So that was what I would call my second introduction, right? And so I landed on a website, and this company or this website, they were selling this new form of money for like $11. And at the time, I'm in my 20s, and I'm like, why would I pay for money? Like, I didn't understand, right? Why would I pay for money? And even if I bought like whatever this is, what would I spend it on? Because that's what I was thinking about. What would I spend this on, right? And so those were the questions that I said to myself, and I'm like, oh, this is crazy. I'm not doing this, right? And I never spoke about it to anyone. I never went back to my husband and said I looked into it. I never went back to the person from that phone call. Nothing, but that was it. And, really those thoughts were really due to like my understanding of money and the value of investments, or really like the lack of it, right? And that was it. Life moved forward. So we fast forward to 2020, and that website had actually turned into a company that helped further build, what we know today as the blockchain. And that new money was labeled a currency. And in 2021, the price of that new money, or that currency now, it soared to like an all-time high of like $65,000 or $70,000. And so if you don't know by now, I'm talking about Bitcoin. And I'll just say it one more time. Yes, I had the opportunity to buy Bitcoin for $11, but I walked away. Because I just did not know. I didn't know what I didn't know. I didn't know how valuable it was going to be. There was nothing in the information that I've had prior, or my understanding again of the economics of money. There was nothing that I had that would tell me or give me a hint, give me a clue, this is going to be big, right? I really can't even like fully make myself calculate how much, that investment would have been worth, to me and my family, had I known to actually buy and hold on to even one Bitcoin, because I'm sure as a 20-year-old, I, hey, even if I was able to buy it, and I somehow held on to it, let's say even for 5 years, 20-something brain, hey, I want to go on vacation. Maybe I would have, spent most of it, right? I'll never know. But that's, that gives me a little comfort. Like, hey, you probably would have done the wrong thing with the money anyway, right? 20-something. But even if I had the wherewithal to hold on to that until 2021, that really could have been a game changer. And so I can sit here today and tell you this story and really laugh about it. I can tell you the story. I don't have to, I'm not, fearful of ridicule or any type of shame. Like, I can laugh at it. I can laugh at myself and just the situation overall, because who would have known, right? But the reason I'm telling this story is because now I know how to identify opportunities such as these. And no, I'm not saying that, through the mentorship or through day trading, you're going to find the next Bitcoin and, make sure you invest your money. No, that's not what I'm saying. What I'm saying is that the skills that I have now as a trader, especially deploying the price action breakout strategy, it really allows me to see different buying and selling opportunities, right? Because we can make money either way, whether you're buying or whether you're selling. But it allows me to see these opportunities just by looking at a chart and making, educated decisions based on the analysis of that chart. And so, in closing, I do want to say, any pursuit of education, information, whatever. There is going to be a cost. And so it's really just about calculating the risk of today against the rewards of tomorrow, right? Which is why some traders, when they're in a trade, they stay in it for a long time because they know there's such a low likelihood of price ever coming back down. Let me get in now and let me hold on to it, right? That's an amazing strategy if you're able to identify the right points in time, to actually get into the trade. And I know for me personally, day trading, represents financial freedom. And so, if you are interested in learning how to day trade from me, joining the mentorship, definitely go to my website, daytradeforaliving.com, and you can schedule an appointment with me and we can talk one-on-one. Thank you so much. I really appreciate it.
Thank you. Now, I did put your link in the chat, daytradeforaliving.com.
Okay.
And look, Steve says, glad you didn't start a Bitcoin quote unquote brokerage back then, like SBF did. And he also said you have a great way of teaching. So you guys should definitely check out DeChandra's website and take advantage of that offer. It's a wonderful offer. So thanks so much for joining us, and I hope you'll come back in the future.
Thank you. Thank you so much. I appreciate it. Everyone have a great day.
Thanks. Bye now. All right, let me just switch over a couple of things. I am here, and I just want you to know that was DeChandra Hendry of Day Trade for a Living LLC. I fixed the URL at the bottom, plus it's in your chat.